Wednesday, July 12th, market analysis, Stan Ehrlich. It's 10:10 in California. A little bit past the middle of the day. And we have a very unusual day today because of a very large gap up on the opening into very important price levels, some new highs. Especially the spider you're looking at right now, which I start with always, has now broken the double top. Didn't work. Never finished to begin with. It was only in the making. So we now have a gap up in some of the other indexes as well. Initially this morning, some fell enough to come back to important prices. For the spider, there is still a gap between today's low and the other highs we have seen in the last month and a half. As a result, we probably are going to come back, and maybe very quickly today or very soon, to the highs that we saw over the last month or so. And I'm going to say 444.50, 444.50. Today's low is 0.90. There's not a lot of space there for a large gap. Nevertheless, we'll see what happens. After that, I expect it to hold and start to head back up again. The bearish commentary I've been having for the last 4 to 6 weeks didn't get as bearish as I wanted to. And we now appear to be unlikely to close gaps that were in the very beginning of June. It's now 6 weeks later almost, and we have new high ground. It depends upon today's close. If all of a sudden everything sinks to around unchanged, for example, or even lower on the day, that would be outright bearish. You put a stop above today's high and try to get sort someplace, but that's not happening yet. Let's look at the very short-term 1-minute chart to see how it's acting during the day. And on the far left, one moment, and on the right, we have this very big gap up this morning, and wow, new high ground totally. Zigzag, slight new highs. Then we had a very sharp, quick break, and it even got extremely oversold on my 1 minute. That's why it turned green. It means maybe a bottom. And it did hold. And we have seen a rally up to some of the trading action earlier this morning. Not necessarily up to the minor bearish breakout beginnings, which is okay. What happens if we start slipping again and we start to see new lows for the day? We need to hit this purple line I put handles on, little white dots, in order to close the gap. And that would be the 44, more accurately, 44.33, 444.33, it looks like. Yeah, that's close enough. So that's one objective that's not very far away. And if that doesn't hold and it keeps on sliding, I know the good news economically looks like best news for a year and a fraction since I think March of last year, et cetera, et cetera, et cetera. Fine. In the next 2, 3, 4 weeks, are we going to have increasingly better news? Yeah, maybe. And that'll keep the bull trend going more likely than not. Frankly, that's exactly what I'm looking for. But this at the moment has the earmarks of a minor rally high. Let's look back one more moment at relative strength on the daily data chart, which is critically important for bigger moves. And we have almost reached my magic number of 75 or higher. We got up to 73.97, 74. And the last time it got up there, it did top out. That's the second high in the double top over a week ago. Now a little lower than where we are. So I would not be surprised if we have a bit more of a dip down to close some gaps. I don't think it's going to get below 437. That's the lows a few days ago. That should hold even if we get close, and up you go. All right, enough said about the spider. You know what I'm thinking. I'm bullish. I have been forever, since October 13th, and said so at the time. What about the DIA? So it just barely made it above. That's not good. This is the perfect makings of a double top. Now, some might call it a triple because of this particular high last week. Nevertheless, let's see something start to happen. We're now substantially below where it opened, and at a few previous closing prices, even below the previous highest close. That's not looking particularly strong momentarily. The 1 minute chart shows you that the opening here was just like the others on an up gap, but a couple of hours ago, we started making new lows for the whole day, and it stayed below its previous lows, and it's trying to make new lows again. Well, that's looking a lot more like a possible reversal. And the QQQs, actually the strongest, quickest, best for the last many months since October 13th, is showing some signs of maybe turning. We've got the up gap, we got the strength, and then we have all of a sudden a sharp break, which made new lows for the day. And it slipped a little bit more after that. Our rally wasn't too big, too strong so far. And if it does start to slip some more, and especially if it starts to get below today's low and stay there and keep going down, maybe in the last half an hour or something, that would also look like today's a minor upside exhaustion gap, or what we call a little mini blow off type of thing. Next, Qs. And I'll get to some brand new signals in the futures in a moment. We've got new highs for the whole trend on the QQQs, which I have to remind everybody, we got the high day on the Qs on November 22nd of 21 with a ER red sell signal. That's the end of the bull market since COVID and the beginning of the bear market of 2022 to the day. We also got the low on October 13th, and that was when I was making my YouTube recordings, so it's on record. I wasn't doing it back in November of 21. I think it started August maybe of 22. So I've been about 200 of them so far. This also has some earmarks of being a little double or 2.5 triple top, something along those lines. The gaps are almost always closed. I can't help it. I gotta keep saying that. I've seen it done for decades and decades. So I have to say it again. It's highly likely it'll come back down to the high of yesterday. As to whether that price exactly holds or not, there's a decent chance. That's classic. But it could also nibble away at the lows of last week, which would be Friday of last week. Nope, Monday, sorry, of this week. And that should hold. Otherwise, there's still support areas bouncing off of a little bit lower. I just doubt that the break is going to be anything significant and last any length of time at all. Maybe just a few days, as far as this dip is concerned, that I'm expecting. All right. Futures. Oh, one more thing. The Russell 2000 has blown through a major resistance area. This red zone has been stopping rallies and breaks for the most part for a year plus, about a year and a half. Frequently, bottom, stopped a rally, sort of, definitely stopped a rally, didn't work, stopped a rally, stopped, and then washed through again, and recently stopped. Not anymore. Next layer up, going to get to this green line right here. That's about 196. That's my next significant upside objective. Oh, one more thing, people. I forgot to point out that the relative strength index in these indexes are generally not that high yet. Just a moment. And here we go. So I like what I see. I'm bullish. I'm looking for a small retracement, and that's pretty much it for the moment. I've abandoned the idea of the market coming down, closing these gaps where this particular blue bar is located. I think it's too far, and we would be too bearish, a longer term type of thing. I wouldn't like to see that at all at this point. Okay, sorry, futures. Got something special for you today, and I hope you've been watching, because the bond futures market bottomed out in oversold condition that I called before the last of 3 days, in an area of support which was on this chart forever, and at a new feature I've been talking about for approximately a week now, cycles. I've noticed this cycle in the bonds before this low, approximately 2 or 3 days before that low, and started talking about it and showing you the EC forecaster software, which is the software that's drawing the green vertical and red vertical from the top down bars. Inside those bars, we're supposed to have a market turn up at green and back down at red. It's a cycle. Cycle is 88 days. The cycle highs are symmetrical, 44 days after the low and 44 before the next low. And our window of opportunity is 10% of 88, so it's 8.8 days. Let's call it 9 days. So 4.5 days before the middle of the green and 4.5 days on the other side of the green bar is the window of opportunity. We love to see exactly, I can't believe what's happened. The market turning almost to the exact day predicted. In this case, like the last time, oversold condition, area of support, and almost a bullish engulfing. I'm so sorry I didn't go green bullish engulfing. Yesterday was the first day of any significance up because it had a new high and a new high close for a few days. And today it's running away. Now we're already getting up to a minor resistance area, which is going to be 26 to 27. Well, actually, sorry about that. 26 to 26 in 10, 30 seconds or something. The bottoms of all of these choppy price ranges and the low way back in here as well. And we're there already. Sorry about that. So not much higher, but RSI is not overbought. So there's some elbow room to go higher. I love the fact that, please watch this. The last cycle low was exactly on my pivot point day. That's why the yellow line. The previous cycle before that was exactly in the middle of the window of opportunity we call WOO, W-O-O, window of opportunity. The cycle low before that did have a bullish engulf, an ER buy signal almost to the exact day it was supposed to. Next, cycle high didn't work. Cycle low was on the edge of the window of opportunity and it turned back up again. And again, we haven't missed yet. We're in the window of opportunity, green. Now, I consider this a good cycle low, but with a footnote. This is when the trend really began to work. So prices did go up significantly immediately after that time frame for the cycle. Before that, you were kind of just going sideways, including a sell signal that worked for about 3 days. But I would call this also a cycle low right at the same time. We're supposed to have a cycle high. So those were in an inverted situation. But I keep seeing these cycle lows happen again and again. And I've loaded historical data that's 20 years, I think, that have caused this cycle to work like it has. Unbelievable. We'll see in the weeks and months to come how this evolves. I think it's a spectacular example of a rhythm that has become very dominant lately, which is the possibility, by the way, of two different cycles that are very close to the approximate same length. But over time they get out of phase, blah blah blah. So watch this one. This could maybe take off like a rocket. We've got some major lows in here. Some people might like to say triple bottom. Can't refute that, but love what I see so far. By the way, it's now going to be 157 days, that's trading days, I believe, to the next cycle high, if it works. So see what happens with 57 trading days. I'm sorry I spent so much time here. Futures, E-mini, holding its ground, pretty much staying put. But I'd like to see more strength if it's going to run like a rabbit for a day or two, or for a major upside breakout classically, or it's going to run out of steam and look a little bad for a few days, closing this breakaway gap. So the next chart is bonds. Natural gas. Back up for a second. Yeah. Next, this is out of sequence. Natural gas, looking for a turn down, had a sell signal that I think we are still in this. Absolutely. The R1 got short. I am not sure whether it got stopped out or not. It's quite plausible yesterday. Depends upon how you like to trail your stop. Very slowly, giving it more elbow room, or speed it up, and is not a moving average. Explanation point. Otherwise, we were late by one darn day to get into an ER3 short that took 4 days instead of 3. I only allow for 3. Next chart. This is the bond futures chart. You've seen it in the cycle window a few minutes ago. Don't need to say too much more. It's working like crazy. What are we up? 1.5 points. Next. 10-year notes, approximately the same thing. Cycles, fantastic. Exactly the same cycle. 88 days. I don't have the EC forecaster on this chart, so there's no point. It'll look exactly the same as bonds. Up we go, getting close to a little resistance. We're not anywhere near overbought yet, so they could push through it pretty quickly. Next, and I'm very bullish long-term on interest rate futures, very bullish. I've been saying that too long, but whatever. Crude, and more strength than I was calling for originally. I didn't think it would break out into minor new highs for about 2 months. But there's so much fiddling around in here that took place November through April, which is a huge resistance area in a general sense. I think it's going to get stuck in here. Oh, and we're almost overbought. We got up as high today as 74.57. That's less than half a point from being my 75 level or higher. So that's super close, something to take into consideration. But it's not going to allow an official signal. Okay, next. Heating oil. Touching that bear trend line that's been there for months, and would be fantastic if it turned down, because we are now super close to overbought with a 74.11, less than a point from 75. I like this combination. There's no reversal yet and no sign that it's turning down yet. Using a stop that's not too far away from the high today, slightly above, and being short anywhere in this ballpark looks like a relatively low risk, low loss if you're wrong. And if you're right, it could easily drop down to 233, 2.33. Next chart. Gold. Almost overbought. Notice how many times I'm saying overbought here. So I don't expect this rally to carry much further. I think it's going up too fast, too quick. That's what overbought is. And it's going to fizzle out maybe a bit higher. Let's call it 1980, 1990, maybe. Next chart, and turn down. Well, silver is kind of already there and also almost overbought. Wow, a lot of the stuff's going to turn down here soon. So there's a little bit more elbow room to test a resistance area, which would be maybe 25-ish, 24. We're not far from it. We're at 24.3 now, so we'll call it 25. And then turn down. Next, platinum. Again, well, we're not anywhere near as close to overbought, so 63 is no big deal. So this does have a lot more elbow room if it wants to go up a chunk more. That still would not change the long-term bear trend that's started. If you make new highs for a long-term situation, many months, and all of a sudden turn back down again, especially big time, which it did exactly at the high with a creation of a double top and overbought conditions, for a longer term double top, one of which is a bearish engulfing ER sell signal. And then we caught the bottom in all three precious metals, by the way, around the same date, February 27th to, I think it was June 3rd or something. Anyway, maybe a little bit more rally, and then it's going to turn down, in my opinion. I'll try to catch the turn, of course, as it happens. That high-grade copper, neutral territory at resistance, has a little more elbow room again, but should turn down soon. Next, here we have it. I have been mentioning this possible extremely large broad double top formation for a week or two now. Got overbought twice. The second time it got overbought several days ago. It punched into new high ground forever and couldn't hold it, and dropped down to close very poorly on that day. And again, that date is exactly July 3rd, the day before the 4th of July, of course. And down you went. Took a day or two to catch. Had a low at a minor area of support, I might add. I thought it might have gone a little bit lower. Then we bounced for what, 2 days? And what happened today? We have overbought conditions within the allotted look back number of days, which is a short number of days. That's good. We have that creates the overbought need. And today we have a bearish engulfing. It turned red the moment we got below yesterday's low. We have an official ER sell signal that I hope to be many months from now an incredible call. I did it October 13th. So why can't I do it with soybeans? I think I can. I have. I hope this is a good one. I cannot tell in advance whether this is actually going to pan out like my story about the giant double top. The major downside breakout on this is extremely profitable just from here. And you need to close below 1068 in order to confirm, quote unquote, that this is a very broad double top without making any new highs. In fact, today's high is my buy stop, a tick above, and we're looking at a new short sale on a rally if I can get one. But ER1 is already profitable and short again the moment it turned red. Next chart. Got overbought a few days ago in soybean oil, dipped, came back, couldn't make a new high, and is now dipping again. Boy, I hope this is what happened to soybeans. And down, down, down. I think we're going to head south. So this overbought condition that was contained a divergence. Well, the first time we got overbought, we got way up on the scale, 87-ish. But the second time we got overbought just a week ago, the indicator, in this case oscillator, didn't make a new high, but price did, and that's considered a divergence, and that is not a strong sign. But we got a long ways to go to prove it was really a great indicator. So far, it's just starting. Next chart, soybean meal, kind of a little pennant forming here, very crude, hasn't developed very well so far, and a possible reversal today. That's not particularly an important price at today's high, but a couple of weeks ago, it came up to one of my resistance lines in overbought conditions, stopped dead, challenged lows, support, bounced, couldn't make higher highs, dipped a little bit a couple days ago. Today, it rallied more, but couldn't stay there. Now significantly lower on the day, in range of a possible outside down day. Watch out. Corn. We had a buy signal yesterday, failed immediately. We would have bought the opening this morning and gotten stopped out at the yellow dot. So from about 93 down to 86, 87 was our loss. 6-7 cents. Next, wheat. New short sale just barely passed the test several days ago when it came extremely close to our stop, didn't get hit. We sold it short on the second day after the bearish signal, which I don't really like because RSI had already dropped into much, much, much lower ground. And I'm going back and forth on this darn thing for the last week and a half. Officially, it's a good signal because the code didn't do anything, but I think the code should have eliminated this red bearish engulfing because it already went from overbought condition in just a few days to a too low a level for my liking. Yeah, that's my excuse. But so far, the darn thing's working. This is a new low since the sell signal, and the second lowest close, it looks like. Next chart, obviously I'm bearish. Overbought conditions for 2 days in a row. Today is the second day, but we're going to have a lower close, it looks like. This looks like a top short term. The next support level down is 176 for the meal. Live cattle. And that's not much. That's not particularly significant. Here, 171-ish is where I expect it to try and hold, and it might even get overbought when it gets down there. Bullish, very bullish, intermediate to long term. So the next thing to do is to try to pick the bottom of this break coming up. Next, Live Hogs had a sell signal 2 days ago. Oops, it didn't work. It looked like a reasonably good one too. And it had a very small loss on a day trade. I'm still looking at lower levels, so excuse me. On a longer term basis, we still have what appears to be a bear trend. And the market's having a lot of trouble in the last week or two. in a general area of all of the previous lows for a very long period of time. So it looks like it should be topping out, and it was overbought, and all we need to do is start to see minor new lows below the low of the sell signal that didn't work 2 days ago. That would cause me to have a little more bearish confidence, but I'm still looking for new lows. Next, OJ. I've been talking about this head and shoulder top now for at least a week. 4 days in a row, we have topped out so far at the same damn prices, give or take a very teeny weeny difference. These 4 highs are in the ballpark of the first set of highs, which I would call, and I'm going to start to draw this pattern in if we start to dip down some in the next day or two. But this would be the first shoulder high. It's got a little 2 humps in it. That's the head of the formation right there, the highest high between the 2 shoulders. And the distance from these, the average of these 4, for example, for the moment, is to here as it is to here. So the distances are about right. In other words, if it took a month to go from the shoulder to the head, it would take about a month to go from the head to the last shoulder, period. At this point, there are no alternatives if this starts to work. You can't go sideways too long, and you can't go up. It should just start to drop, and pretty much immediately. If it goes up, I'm permitting just a tiny bit, and then a quick failure. This looks like a shoulder. I can't help it. Next, Cocoa. Bullish as hell, looking for a reason to be long again. Trend is very strong. Got a divergence top at the moment, but we have no confirmation. It's not even a new low for 3 or 4 days. No big deal. Next, cotton, the rag, sideways, boring. We're looking for a major breakout. Last time it got overbought, oversold. It got oversold only a couple of weeks ago and rallied very quickly and nicely. So far, today's the highest high since then. But again, boring. Next is sugar to sweet. The buy signal is starting to work. Outside up day a few days ago within the look back range of time since being oversold, which was, of course, about a week earlier. So that's a good buy signal just in time, I might add. And we did not get stopped out. And today is a new high. So we're long at the green dot, 2350-ish, 23.5, give or take a few ticks. And it's now 90, 2396. And above previous highs since the buy signal. That's good, good, good. Looks like breakout in progress. Next is coffee, which came down and just barely stopped us out yesterday, unfortunately. That happens. Today's an inside doji sideways, slightly lower at the moment, trading range. And if this thing starts to go straight up from here, I'm not going to be happy because we got stomped out right near the bottom. But these signals do cluster, I've mentioned before. They sometimes are 2 or 3 or very rarely 4 of them in 1 month. So maybe we'll get that. And finally, we're back to the E-mini, which is hanging in there. Let's take a quick final last look at that before we go. And this is the 2000 daily. So, didn't want to put that button. I actually can't unlock my icons, TradeStation. So I leave you with this. You guys have a great day. Sorry this was so long. I had a lot to say.